Greetings students, this is Balakrishnan again from BALAS Accountancy Special Classes. Well, today we are taking up just two full-fledged sums wherein some adjustment entries are there, an average level adjustment entries. More complex adjustment entries and tougher one sums and adjustment entries will be worked out in the ensuing episodes. Incidentally, I have a suggestion. You kindly watch my episodes as far as practicable in a laptop, desktop, or if possible, even in a smart TV. Because I am very particular, the figures should be very legible, and I am using very simple technique only for recording it. Okay, so if you can use any of these apparatus, it will be better. Anyway, this is the reason why I am dispensing with the whiteboard behind me as far as possible, because figures should be very legible. Okay, so let me switch over to my sharing mode today. Thank you. Well, this particular question is not from D.K. Goyal's book, from some other source I have managed it. Okay. I don't want to take a very tough one at the very beginning. That's an apt sum from some other source I have managed it. All right. I'm pausing it so that you will be able to take it down. The remaining part. They are given as a tally trial balance. Okay. Of course, it has got 5 number of adjustments, moderate level of adjustments. Well, now since I want to teach you in a systematic way, I'm allocating the trial balance items. These blue-violet items represent trading account, red one, profit and loss account, and black one, was balance sheet. And of course, I presume you have watched my previous episode, then only you'll be comfortable in it, because there I have given the elaborately what is a trading account, what's a profit and loss account, and what's the balance sheet, and the technique of preparing it elaborately I have given there. So kindly ensure that one, then only you follow these episodes. Okay. So trading account items are in blue-violet, and remaining nominal accounts that will get qualified for profit and loss account, that will be in red one, and the black one are real accounts or personal accounts to be considered for balance sheet. Okay. Now let me explain to each and every adjustment entries. So now onwards, adjustment entries will be your major task. Okay. First one, closing stock. Closing stock is valued at rupees 36,000. Credit side of trading account, already I have explained in the previous episode. Okay. Closing stock will be shown in the credit side of trading account and opening stock in the debit side. Okay, then only you get the proper cost of the goods sold. And since it's an asset also, it will be shown in the asset side of balance sheet as a current asset. Please note that each adjustment entry can be generalized, and therefore it will have 2 aspects. Okay, one debit and one credit. Okay. 2 aspects will be there. Our first aspect will be in A and the second one will be B. So this has been taken care of. Okay. And the next one. Private purchases amounting to rupees 5,000 has been debited to purchase account. Okay. I already explained in my last episode, any removal of the purchase goods for non-trading, non-selling purpose means it has to be at the outright reduced from the purchase. Then only we will be able to get the proper cost of the goods. Okay, right. So sometimes you may use it for advertising purpose, or sometimes like this for drawings purpose, everything, or maybe for personal purpose. There is nothing but drawings. So outright deduct it from the purchase account. Okay, because this much goods what you have purchased, you are not applied for sales. Simple like that. And since it is for your private purpose, add to the drawings account in the balance sheet. Okay. Next, adjustment. Make a provision for bad and doubtful debts at 5% on debt days. What is the provision for bad and doubtful debts? What's the difference between a bad debt and a provision for bad and doubtful debts? Bad debts is confirmed. He is not going to give it. Provision of while finalizing the accounts, I listed down all my debtors and I found that some of them are unlikely to give. Okay, a certain percentage of them are unlikely to give. Suspected case of bad debts. Even a suspected case is also loss only. A suspected loss is also loss only. So how to go about it? If bad debts is given, here it is already given. So in the debit side of inner column of the profit and loss account, the bad debts. And the new provision calculator, add to that. How will you calculate the new provision? A rate is given, just apply on the debtors value, right? Since the new provision is already given, the existing provision, if at all there, and it is there in this sum, is no longer required, hence reduce it, okay? And show the net amount in the outer column of the profit and loss account. And the second aspect, the new provision for bad and doubtful debts may be deducted from the gross value of sundry debtors. Okay, like that you show it in the balance sheet. Okay. Next adjustment, adjustment number 4. A new signboard posting ₹4,000 is included in advertising. Well, signboard is not a revenue expense. It is nothing but a fittings. So it has to be included in furniture and fittings. It will be considered as an asset. So first entry will be deducted from the advertisement expenses, wherein you had already included it. Second one is add to the furniture and fittings. Okay. So furniture and fittings already some amount must have been given. So to that you should add it. The amount should go up now. Okay. The new value of the furniture and fittings will be different from whatever has been given in the trial balance. So both the aspects have been taken care of, right? And the next one, the last, depreciate furniture and fittings by 10%. Here, students should always keep it in mind. The adjusted value of furniture and fittings should be depreciated because it got changed now. Above case number 4 has made the furniture value to get changed. So that value you should consider and apply your rate for arriving at the depreciation. And depreciation, you know, it will be shown in the debit side of profit and loss account, and the same amount will be deducted from your adjusted value of furniture and fittings in the balance sheet. Okay. So adjustment entries I explained you. Now let us move to the trading and profit and loss account and balance sheet. First, let us take up trading account. For your convenience sake, I have already shown those items in the blue-violet color. I have just shifted those items only here. Okay. And of course, purchase has been subject to adjustments. Drawings, 5,000. We have been told there is a 5,000 rupees purchase has been utilized for private purpose. Okay. So that has been adjusted here, which I already explained to you. Then purchase return as usual, I made a deduction, and this is the latest value of the or net value of the purchase. Similarly, sales subject to sales return, and this is the net value. And we arrived at the gross profit. Income side is more, put it here, difference is this much. Simple like that. This is the way for the purpose. Any account will be balanced. Total the heavier side, put the same total across and find the difference. Okay. And I have brought forward that item here, rather brought down that item here. And all the remaining nominal accounts that has been shown in a red color has been posted here. Okay. I told you I need not explain to you entry by entry. Okay. That method you go by, right? And wherever adjustment is there, I prefer to explain. Bad debts. Already bad debts is there. And to that, new provision for bad debts I have added. 4,000 rupees. How did I get the new provision at 4,000? Is just apply the rate on the debtors, you get 4,000. And I don't need the existing provision, that being the case, I reduced it, and this is the value I am showing outer column. And as far as advertisement is concerned, 10,000, I reduced the signboard, unnecessarily included here, and this is the right expenditure, fine. And furniture and fittings. Fittings are furniture they are shown. To that, fittings, furniture and fittings is the appropriate accounting head. 4,000 our advertisement signboard, that is also part of this one. Okay, that has been added 20,000. So on 20,000, 10% depreciation I have to take, not on 16,000. So 2,000. Now, here it happens to be net loss. How? Expenditure side or the debit side is more. I put the total here. I find a difference of 4,600 here. Okay. So that is net loss. That will be transferred to capital. Now balance sheet. Balance sheet marshalling has been ensured. What is marshalling? What is grouping extra? I have explained in my preceding video BSE 029. I already told you, kindly watch, then only join in this class. Okay. So first liability side, current liabilities have been shown. Capital, given capital, net loss is a reduction. Again, drawings also deducted from it. Why 14,000 I added 5,000? 14,000 is the given amount in the question. However, adjustment they have 5,000 is there. So that adjustment we have to consider. Is it not? Private purchase 5,000. That is also a part of the drawings only. So total drawings is 19,000. And the latest capital is 1,76,400. And this said cash okay, debtors. 80,000 is the gross value of the debt is given. Let the latest bad and doubtful debts, latest provision. So it makes the debtors value 76,000. Process okay. Furniture 16,000 is the given value in the question, and I have added that value of the fittings also 20,000. From that, the depreciation what has been charged is deducted. So 18,000. So we have got a tallied balance sheet. Okay. So that's all here. Okay, I'm just showing you once again. We have got your gross profit 1,09,000 brought down here, and we arrived at net loss is 4,600. Finally, we have prepared the balance sheet. We have got it tallied. So with the 5 adjustments, this balance sheet has been tallied. Always have a firm grip on the techniques what I have told you. Okay. Accordingly, if you do it, any tally trial balance has to invariably lead to a tallied balance sheet. Okay. Provided you are sufficiently careful. Okay. That's all as far as this first sum is concerned. Now, let me take up the second and last sum of the day. Thank you. Well, students, the other question, second and the last one of the day. We have been given a trial balance prepared as on 31/3/2021. I am posting it suitably to enable you to write it down, since it is not available with the DK Goyal's book. Okay. A tally trial balance we have been given, followed by 6 number of adjustments. And as usual, let me do it in a systematic way by giving different colors to the different part of the final accounts. Blue, violet for trading account, red one for profit and loss account, and black one for balance sheet. Okay. So in the previous sum also, I manage it like this. The purpose of doing it is, I need not explain to every item. You go by the system. Okay. Adjustments. Let me explain to you one by one the adjustments. Closing stock is valued at rupees 50,000. You are an expert by this time. One in the credit side of trading account and second one in the asset side of the balance sheet. Any adjustment is practically a journal entry. So it has to be shown in two sections or two sides, one debit and one credit, as already explained in my last sum. Right. Whereas, please keep it in mind, any item taken from the trial balance, we will take it only in one place, or at the most fractionally one place and fractionally other place, but overall amount will be one and the same. So practically, let us conclude that any item taken from the trial balance in one place, whereas any adjustment entries in two places. Okay. Now, next adjustment. Write-off rupees 2,000 as bad debts and provision for bad debts is to be maintained at 5% on debtors. Bad debts already an amount is given. Add to the existing bad debts in the debit side the given amount and deduct this further bad debt from the debtors in the asset side of balance sheet. Those are the two aspects. Okay. One, you show as an addition to the existing bad debts in the debit side of profit and loss account, and other one as a deduction from the gross debtors in the asset side of the balance sheet. Now, other part of this second adjustment, provision for bad and doubtful debts. As already told, bad debts, add further bad debts. Now add a new provision for bad debts. Now, how will you arrive at this new provision amount? Original debtors minus further bad debts. In that one, we are doubting certain cases. There only apply the rate. Okay, you'll get an X amount. That's the new provision for bad debts. Obviously, we don't need the existing provision, that you reduce it. That is the first and second part of the adjustment is deduct new provision for bad and doubtful debt from the debtors in the balance sheet. Only new provision, that too original debtors minus already further bad debts stands deducted. From that, you reduce the new provision. Well, you'll be more clear when I show the facts and figures in the profit and loss account. Now, next item. Loan from X was taken on 1/8/2020 and no interest has been taken. I'm sorry, no interest has been paid so far. So, interest payable on loan, 10,000 was the amount. It is for 8 months. Never make the mistakes of 9 months. Sometimes people will think suddenly, okay, 9 months like that. No. If you count, it will be 8 months only. So 8 by 12 into rate, you will find 1,200. That how will you treat it? So as an expenditure in the debit side of profit and loss account, and as a liability, a current liability in the balance sheet. Okay. Now, next item. Included in general expenses is insurance premium rupees 1,200 paid for 1 year ending 30th June 2021. Well, insurance also they are including in the general expense. That is their practice. Sometimes insurance expense is shown separately. Okay, let's forget about all those. The thing is that in the general expense, insurance having been included, there is a prepaid element that we have to deduct. That being a prepaid insurance. And what is the amount of prepaid insurance? For 3 months, April to June, for the entire 1 year, 1,200, in that 3 months will be 300 rupees. That is the prepaid part of the insurance that you deduct from the general expenses. Okay. Thereafter, show it as an asset, the balance sheet, as a current asset. That's all. And next one. 1/3 of wages and salaries is to be charged to trading account and the balance to P&L account. Why they have given it like this is simple. See, we will see that They are not separately given the wages or the salaries. They are together, they are shown wages and salaries. So to allocate it between trading account and profit and loss account only, they are given it. Okay. So 1/3 wages 6,000, 2/3 salaries 12,000. Respectively show wages in the trading account, salaries in the profit and loss account. It's a minor thing. Okay. And the last one, end-day stationery was used for personal use. The way personal use means you should strike in your mind very fast drawings. So we have no place to show this one in the nominal account. Hence, I am removing this. Okay, it has been already removed. Here also, let me remove. It comes in the balance sheet, not in the profit and loss account. Okay, just take as a balance sheet item. Consider it as a drawings. That's all. Now let me deal with the three sections of the final accounts: trading account, profit and loss account, and balance sheet. First, trading account. I just shifted those items which have been clearly separately. I have shown it with different color. Okay. However, returns, purchase, return from purchase and sales return from sales have been adjusted and net amount has been shown. Okay. This side is heavier, put it here. Difference I find, gross profit 1,19,600. That I am bringing down to my profit and loss account. Now, the remaining nominal accounts, which is shown in red colors, each one you pick up and show here. Okay. However, I prefer to once again mention the adjustments. Okay. Bad debt 6,200 is given in the trial balance. Further bad debt, they told you 2,000, add to that. And again, you add the provision. Provision for bad debts also will be clubbed with bad debts. Now, how did you get this 4,000? 82,000 was my debtors. Further bad debts, I had to reduce. And 80,000 is the one that they want a 5% provision on. That comes 4,000. So 12,200 now comes. Now, of course, obviously, I don't need the old provision because new provision is there. So that I reduced, and this 9,700 is the amount I should show in the outer column. Repairs okay. General expense, you know, the prepaid part, 300 rupees I'm reducing and I'm showing 10,300. Salary is okay because it's 2/3. Obviously, 1/3 I have taken here, right? Interest on loan 1,200. I worked out and shown here 1,200 rupees. Okay, that I am showing here. And this side, everything is very clear as it is. Okay. So 1,21,720 income side, I put it here. I find a balance of 84,900 being my net profit, which I'm transferring to my capital. Okay. Now here also marshalling I have ensured. Right. Capital 2,17,000 is the trial balance figure. To that we added the net profit and the drawings 2,000. Drawings is not in the trial balance. However, adjustment. Okay, they are told that end-day stationery was used for personal use. So that is the drawings. Okay. My latest capital is 2,99,900. And as far as the asset side is concerned, cash in hand okay, cash in bank okay. Debt is given balance in the trial balance is 82,000 less further bad debts. Reiterating, further bad debts only you should reduce. Okay, that is the adjustment entry 80,000. On that 5% provision 4,000, and this is the 76,000 net amount to be shown in the asset side. Closing stock okay, prepaid insurance 300 I have already worked out and shown. Investment, building, everything okay. So we have got a tally balance sheet. So let there be n number of complex adjustments, if you have got a basic trial balance and if you have carefully learned how to adjust each item, certainly the trial balance has to eventually lead to a tally balance sheet. Okay. So that's all for today. Take care of yourselves. See you soon.